Since I came here, I think we have been working on a country engagement strategy with China. We are talking about a country that has extricated about 800 million people from poverty. We are talking about a country that has about 500 million or half a billion middle class. Africa should stop exporting raw materials and unprocessed goods. We need to add value. Are we looking for additional finance from China? Surely. Implementation of DSSI until mid-June is, as I said, a good thing, but on the other hand, it will not solve, I think, our problem. Where will money come for Africa? Where will money come for Ethiopia to have the stimulus package? That is what we are asking our partners. And so far, we have come a very long way, but I still believe that we have a very long way to go.
Hello everyone, welcome to Development Reimagine's easy to digest video and podcast series, Africa Unconstrained, supported by Quartz Africa, an essential online source for understanding the forces shaping our world. Our aim with Africa Unconstrained is to explore African perspectives on the continent's new era, especially in the context of a post-COVID-19 world. If you don't already know Development Reimagined, we are a leading, independent and African-led international development consultancy, with our headquarters in China and with offices in Kenya and the UK. Our mission is to provide new ideas and solutions to deal with the complexities of global poverty and climate change, and it's a mission our diverse team really strives for every day. I'm Hannah Ryder, Development Reimagine CEO, and without further ado for this session, I'm very excited to be here with our distinguished guest, Ethiopian Ambassador to China, His Excellency Teshome Toga, to help reveal his unique perspective on Africa's 55 varied economies, especially Ethiopia, of course, and how to protect and revitalize their growth in a COVID-19 context, and possibly with China. Ambassador Toga was previously Ethiopia's ambassador to Belgium, Tanzania and Kenya. He served as Speaker of the House of Representatives in the Ethiopian Parliament and as Minister of Public Enterprises. Thank you so much for joining us, Ambassador. I want to start off our conversation today with a number. If there was one number that you think every African and Ethiopian should be aware of with regards to Africa's economies in a post-COVID-19 context, what would it be and why?
Well, first of all, thank you very much, Anna and Development Reimagine for giving me this opportunity to share my perspective about this important project, China-Africa Partnership. Well, if there is one number I wish Africans to remember in 2020, it would be the population of Africa. If you look at the population size of Africa, you have 1.3 billion people in the continent. Now, what impresses me again about this size is the diversity of the size of member states. Take the largest country, Nigeria, with a population, with an estimated population of 220 million currently. And then the next two countries combined, Ethiopia and Egypt, are more or less the size of Nigeria. Then down there, you have, sovereign states, but small countries with small population size in less than a million. So that is a diversity which is important in itself. But when you want to present yourself as Africans, I think presenting even bigger country like Nigeria or a second biggest country or largest country like Ethiopia would not really make a big impact. That's why the unity of our size, the unity of our strength actually, which is our size in terms of population, in terms of number of countries in the continent, I think that figure impresses me a lot. And I think the point I'm trying to make is that presenting each individual member country in the currently globalized world does not make any significant impact. Look at China with a population of 1.4 billion. Look at India with a population of 1.3 billion. Those are the countries that we are competing with as a continent, not as a country. So That's the number I wanted to mention to my fellow Africans.
Thank you, Your Excellency. And that is a perfect number to kick off our discussion today, showing not just the diversity, but also the importance of unity. And indeed, while we know that every African country is different, both in terms of demographics, history, debt profiles, as well as financial needs, let's look into this question around African finances a bit more, and how, for example, Ethiopia has dealt with some of these issues. Ethiopia's COVID-19 social protection initiatives, we estimated, were going to be reaching around 27% of the population. And the central bank also planned support for private commercial banks, and in total, we estimated that would come to about 2.1% of GDP. Now that's significant, but it is lower than many other parts of the world. What's your assessment of how Ethiopia has coped and is coping going forwards with COVID-19 strategies and financing COVID-19 response?
Well, that's a very interesting question, Anna. First of all, COVID-19 is an emergency. In the case of Ethiopia, the first COVID case actually was reported around March last year. Therefore, the government was forced to mobilize resources. It means that the government has to really divert and pool resources from already committed sectors, including education, including health, including agriculture, and other resources. So the question was balancing all this in your priorities. In terms of mobilizing resources, the Prime Minister has taken several initiatives. One, domestically, he mobilized the private sector and the general public. The private sector in Ethiopia, including private banks, have injected a lot of money, so that should be taken into board. The second is the general public, in its way, contributed also a lot. And there were several other social mobilizations, including here in China. This embassy, we have mobilized a significant amount of medical equipments, including personal protection equipments and other equipments. This does not include, by the way, what is donated by the government of China or by major foundations like Alibaba Foundations and the other. But this is the effort that this embassy has made. Each individual diplomat throughout the world, each individual Ethiopian throughout the world contributed to the fight. Now, the point here is that we have two challenges going on or ongoing. One is still the virus is there and we are fighting. The second is that many countries, including China, United States, European Union, are discussing about post-COVID recovery. Post-COVID recovery for us is a critical one. The current fight is important. It is a humanitarian aspect, but on the other hand, long-term development impact of COVID-19 is very serious. But getting foreign direct investment is a serious problem because of, again, movement of people and goods and services. Now, in post-COVID recovery, many countries have injected a lot of resources by way of a stimulus package. And that's not seen in Africa because we already have a critical financing problem. First, to fight the virus itself, and secondly, to allocate additional resources for post-COVID recovery. I was reading an article today saying that Africa might need $9 billion to buy vaccine as well as to administer it. And that will cover not the entire African population. It will only cover segment of African population. That's the situation we are in. Where will money come for Africa? Where will money come for Ethiopia to have the stimulus package? That is what we are asking our partners. Secondly, we have what we call debt service suspension initiative taken by G20 countries. Ethiopia is beneficiary of that. But as we said again and again, debt service suspension initiative is a good thing. It gives you a temporary relief, but it does not really have a significant impact in terms of stimulating the economy, because several factories, several industries have reduced or totally stop production. They need injection, in terms of finance. They need support. So certainly Africa needs more finance. And where would that finance come from, I think, is an issue.
You're absolutely right, Your Excellency. It's crucial to discuss where the finance will come from with all development partners. Now, Your Excellency, being based in China, I'd like to ask you where you think the Ethiopia-China and Africa-China relationship more broadly should be going, both in terms of finance and other issues. For instance, there have been recent changes in China's domestic policy due to COVID-19, with a focus on a new policy called dual circulation. Do you think it will be easier in this context or harder for Ethiopia and other African countries to get more loans from China in future? You mentioned foreign direct investment. Are you working to push for that or for public-private partnerships instead? What are your key areas of strategic focus?
First, to get additional resources, of course, we have now agreed and signed the DSSI initiative, or DSSI, and then it means that as of now, until mid-2021, the debt payment, repayment will be suspended, and then we'll start paying. Expectation is that there will be more negotiation because until then, because we are not sure even we will be able to contain the virus, even with the upcoming vaccine. So the issue of implementation of DSSI until mid-June is, as I said, a good thing, but on the other hand, it will not solve, I think, our problem. Now, are we looking for additional finance from China? Surely, as Ethiopia, I can speak for my country, we are looking for additional finance. And where will that finance come from? China is one source, of course, but in order to get more finance from China, of course, we have a number of issues that we need to negotiate with China. The first thing is the existing arrangements and the implementation of the DSSI. The second thing is how much money we will get. As a matter of policy, we have stopped borrowing commercially, and we are only looking for a concessional loan, and of course, aid money if it comes from FOCAC as well as from other sources. In my view, we cannot only look at Chinese financial institutions, we also need to look at foreign direct investment. And as I said earlier, we have problems regarding FDI now, because Chinese enterprises cannot move to African countries because of a number of protocols that are restricting movement, because when they return back, even if they can freely move in Africa, depending on the protocol of each country, but when they return, they will be quarantined for 14 days. You have to get tested 2 times and so on and so forth. And private sector or even public sector, they're not very much interested. And this is not really something that is very attractive. Secondly, China's economy also was affected, but it is an economy now that is fully recovered, as many analysts would tell you. But still, Chinese private as well as public sector require most of the finance back home. So the question of how much money, how much finance will be available for us, whether for loan or foreign direct investment, I think is something that we need to negotiate with the Chinese private sector as well as the public sector. I think that as well. The second source, in my view, or the third source, in my view, is trade. But as you know, trade with China in the last 20 years have increased 20-fold. We were about 10 billion. Total volume of trade between China and Africa was about 10 billion in 1999, and currently it stands around 208 billion. And of course, the growth is phenomenal. But look at the volume, and the volume is still for 54 countries, 54 African countries, 1.3 billion African people, and trading only 280 billion. Compare that with the Chinese trade with individual countries like United States, or neighboring countries is still very small in terms of volume. We are getting maybe 4% of total trade volume with China. That's not the whole story. That's not the whole story. I think one major structural problem, that's what I call it myself, and the supply side constraint. I think it's good that trade volume between China and Africa has increased, but we are still selling commodities where our size of export to China still is small in terms of numbers, in terms of, as I said, for a continent like Africa. So we need to do more. What can we do? We can increase productivity using technology, using variety seeds, using skills, using, I think, knowledge in agriculture, investing in agriculture. The second is that once we have increased productivity in our commodities, primary commodities, agriculture, Africa should stop exporting raw materials and unprocessed goods. We need to add value. Let me take the case of Ethiopia. We have been trading coffee for centuries now. However, most of our exports are still, unprocessed raw. So we are trying to add value to it. And I think that's what we need to do as Africans, value addition. My thinking is that we can still use Chinese private sector to invest and then have joint venture with African private sector so that they can learn, I think, value addition. They can learn benefit from technology transfer. They can develop the skills. There are staff and workers could also learn from the Chinese partners. Now, we are promoting, trying to promote our products. This is the second largest economy. This is the first and the largest market for your products. A country of 1.4 billion people. First exporter and the second importer. If you cannot benefit from this huge and rich market, we are talking about a country that has extricated about 800 million people from poverty. We are talking about a country that has about 500 million or 500 million middle class. So imagine, entering into this market. Of course, there are other problems, customs, clearance, standard meeting, negotiations. You have so many related issues. Those are not easy issues, but we should start working on them. We are working on them, like Ethiopia has started working with China on how we can export meat to Chinese market. But the process takes long. We are discussing with China how they can ease. Of course, they cannot really forego some of their standards, but how can we help build our capacity, negotiating capacity, meeting the standards of Chinese consumers, meeting the standards set by the Chinese government. It is very important that we have sustainable partnership, and partnerships are sustainable when they are mutually beneficiary, and that is what we are trying to do with China. I think so far we have come a very long way, but I still believe that we have a very long way to go, and it is only this candid discussion that will help us overcome some of the challenges. And of course, in concluding my answer to your second question is that I always believe we need more cooperation, we need more investment, we need more trade. It's not less. We have challenges, we have to address the challenges, we have to overcome. And the answer to our current even challenges is more investment, more trade, and more cooperation.
Completely understand that. It makes a lot of sense. And we always, at Development Reimagined, we talk about having a holistic strategy, and it sounds like that's exactly what you're aiming for with China. And yeah, you've moved already. You're still making progress, and that will be really interesting to see how that moves in 2021. Look, Your Excellency, it's really important that our audience understands an African perspective from China on these issues. I follow you on Twitter and see the different engagements that you're making. And yeah, I'm sure there'll be plenty more of those opportunities. So thank you so much for joining us, and thank you to our audience. Please do follow us at www.developmentrreimagined.com developmentreimagined.com and on Twitter at devreimagined, and also our partner at www.courtsqz.com/Africa. Thank you all for joining, and see you next time.